$1.2 trillion bipartisan infrastructure bill awaits the signature of U.S. President Joe Biden. It contains controversial crypto tax provisions, despite alarm bells sounded by crypto lobbying groups. Joining us now is Mike Colyer, CEO of Foundry, a crypto mining advisory firm and sister company to CoinDesk under parent company Digital Currency Group. Hello there, Mike. Thanks for joining us. So one provision potentially within this infrastructure bill ropes in miners into the definition of brokers, and there is another one that also mentions digital assets would possibly require further reporting requirements for transactions exceeding $10,000. So crypto advocates have warned that this could be disastrous for mining. Is that true? How do you feel about it?
Yeah, it's a great question. I mean, I think there's a lot that needs to happen before that becomes law. And there's a lot of folks that are working to make sure that they get the regulations right. And, being at Foundry, part of DCG, we're working, hand in hand with the industry to make sure that the regulations that they put forth make sense. And it's going to be interesting to see how it kind of plays out.
So, Mike, you're getting into involving institutions into proof of stake mining. So what institutions are doing this, and who are you targeting, and what exactly are they doing here?
Yeah, Lawrence, it's our mission at Foundry is to empower decentralized infrastructure, and we started the business focused on proof of work. We really helped the North American mining ecosystem bring more hash rate to North America. We launched a pool, which is now the largest pool outside of China for Bitcoin mining. And today we're announcing our Foundry staking business. So we support large institutions, banks, wallet providers, exchanges for staking services. So the other half of decentralized networking is proof of stake. And we think there's a lot of potential in these various networks.
So you mentioned you mentioned the likes of banks, et cetera. Is there a particular type of institution that has expressed interest in proof of stake mining, or are you just taking a shot in the dark here? And also, what kind of currencies have they expressed interest in doing a proof of stake mining?
Yeah, so we've been staking for the last probably 18 months now. We started with staking DCG assets. So we've got our own skin in the game. We work very closely with Genesis and their customer base. With these new protocols that are coming out, many hedge funds, venture capital firms are looking at investing in these assets. And so you can invest in the asset, then you can also use those investments to help secure the network and earn rewards. And as they want to do that, they're going to want a trusted partner to work with. And in terms of other financial institutions out there, I think every financial institution in the world right now is looking at this digital asset ecosystem and trying to figure out how they're going to play. And as they start to navigate that process, they're going to want a trusted partner to work with. And I think that's what Foundry is going to be able to bring. When we started the company, Barry Silbert said, we want to build something for the next 10 to 20 years. We're going to be here through the thick and thin of the industry. And we've got, our own skin in the game. So we're going to be, I think, a really good option for folks.
So one of the most interesting crypto stories over the past year or so has been this shift from, China to the United States or to North America in mining, right? And you're clearly at the center of that shift. Can you just talk a little bit about, how this is playing out in the U.S.? Like, what are some of the states that are leading mining, or where do you see most of the mining going in the U.S.?
Yeah, so I think it's been amazing what has happened over the last 12 months, right? I mean, if you step back, if you think about the Bitcoin network, probably one of the biggest attacks on the Bitcoin network has been China shutting down mining. And it pretty much didn't skip a beat. It's really amazing how strong and decentralized the network is. And a lot of the hash rate is coming to North America. And we've seen a lot of mining companies be able to raise money on the public markets. The miners are incentivized to go find the lowest cost energy. And that lowest cost energy typically is renewable energy. So they're going to the places where there's been a lot of new energy assets built. So places like Texas, the Midwest, any place where there's hydro, like the Tennessee Valley Authority is a big area for that. Upstate New York is a good area for it. So there's a lot of places where there's low cost power and infrastructure available, and miners are taking advantage of it.
So, as Christine mentioned early on, there's this provision in the infrastructure bill, which, if it became law, seems like it could be very problematic for mining in the U.S. And, one of the issues is that I don't think that Washington lawmakers or just the general public necessarily understands why the mining industry is good for the U.S. And I'm just curious, how you would articulate that argument. Like, if you were trying to argue to Washington, okay, here's why we want to attract mining to the U.S. Here's why it's actually good for the country. What would be some of the arguments that you would put forward?
Yeah, so we're spending a lot of time educating, right? So that's kind of the big focus for the next probably 6 months, is educating the folks that are representing us on this industry so that they understand kind of the decisions and the rules that they're trying to put in place and what the impact is. I think decentralized infrastructure is going to be critical to solving a lot of problems going forward. When we talk about, giant tech monopolies and such, they're nervous about what decentralized infrastructure does for them. And I think this is going to be a great alternative for folks. Decentralized systems help level the playing field. It allows more people to be involved. It allows, everyone to engage. If you want to mine Bitcoin and support it, the network, you can do it. It doesn't matter who you are. And I think that's such a huge, powerful concept that what we have found is when we speak to lawmakers about it and start to talk to them through how this process actually works, they actually get super excited about it. Like they want to know more. They start going down that Bitcoin rabbit hole, and they just want to learn. And it really is eye-opening, and it's exciting. And I think we're just at the very early stages of it.
So, Mike, you mentioned states like Tennessee, Texas, upstate New York. What kind of facilities do you purchase? Are you leasing? I'm asking on behalf of all my real estate friends who keep bugging me about, where should they invest in real estate? What as a miner, what are you doing in that regards? Like, are you purchasing facilities? Are you leasing them? Are they warehouses, converted office buildings? How does this work?
Yeah, so Lawrence, you start with where can you get low cost power, right? And then the big trend right now is mostly kind of greenfield operations where you're putting containers out there. On the staking side, the proof of stake side, it's a very different business where you're actually building infrastructure in the cloud or on bare metal in traditional data centers. At Foundry, we're building our own private Foundry cloud. So the staking works in a little different way than the proof of work mining side.
Mm-hmm. You mentioned that you're talking to institutions as well as folks and regulators, those policymakers in DC. ESG, environment, social governance, and the energy consumption of mining is often a talking point around when it comes to concerns around mining. So I wonder how you're addressing that. And is that a reason why you're moving toward proof of stake mining?
Christine, great question. So proof of stake, we empower decentralized infrastructure, right? And there's kind of two approaches, the proof of work, proof of stake. They're both going to exist. On the proof of work side, when the question comes up around, energy usage, look, at the end of the day, Bitcoin mining, the Bitcoin algorithm drives miners to the lowest cost. And I believe the lowest cost energy is renewable energy. And Bitcoin mining is actually a bridge to a future where we're going to have 100% renewable energy. We can't get there today without it. And as what we're seeing is the biggest energy companies in the world are starting to understand the power of a large base load that's intermittent, and they're going to be integrating it right into their infrastructure. They're doing it today. I mean, it's amazing what's happening. So on the proof of stake side, there's just there's a whole bunch of new protocols out there that solve different problems that are different than just like Bitcoin, right? Bitcoin's a great store of value. Someday it can be a currency. With the proof of stake side, they're solving lots of other problems, and they use a different method to make that happen. So we support both. We think both are going to exist for the future, and we're at the very beginning of a pretty exciting decentralized world.